Good morning, traders. Today is Wednesday, March 17th. My name is Charles, and this is the Pirate Traders live stream. Okay, so let's take a moment to talk about what happened yesterday in the market. Okay, let's actually step back 2 days. 2 days ago in the market, on Monday, the market was balancing within a previous balancing area. Once it got to the high from the day before, or from a couple days before, it broke out with a spike. Okay, then the overnight activity 2 nights ago remained above. We opened yesterday above that spike. We spent most of the day, the first part of the day, grinding around above the spike, and then here in the H period, some news came out about treasuries, and that caused the market to sell off. Okay, that sell-off brought us back down into the previous balancing area, but we pushed back up at the end of the day and closed above. Okay, we closed at almost exactly the prominent POC from overnight, which was almost exactly the closing price of the previous day. Okay, so our closing price yesterday literally was almost exactly to the tick the same as the day before. That's to be noted. Okay, so last night what happened was the market sold off and it pulled us back down into the balancing area. And the reason I think this is important is because of how prominent the trade just above this level is. Okay, this is going to teach you the importance of balancing areas and how important these levels are. The breakout of it at the end of the day was the spike higher. We remained above it. We dipped below and then pulled back above. And then we fought, the overnight traders fought a good fight at this level, thinking this is what would hold, and then it broke. This period here, where we have the single prints, that was the break, right? So as soon as you got through this level, it caused the market to sell off down to these lower levels. So we're opening today inside of this balancing area, and this is important. Okay, the market is open. Just give it a minute to load on up here. Okay, so we are gapping lower. This red arrow is the gap down, and we'll talk about that in 1 second, but I just want to talk about first the balancing area. Okay, it's an important concept for people to understand. So when the market had all this excess that pushed us higher, this was the high, pulled back down, overnight market. I'm going to ignore the overnight, and I'm going to focus on the low from the next day, because that was the balance, right? The market got too much excess, it needed a balance. That's what this day was, 312. Okay, it was a balancing day. So I'm going to consider its low the balance area low. It also created a poor low, increasing the odds that it needs to be revisited and repaired. Okay, so the push above, the breakout is the high of the balance. So now this is the balancing area, this area here. Generally what happens if you look above a balancing area and then you pull back down into it is you trade to the opposite end of balance. Okay, the fact that we also have a poor low here is an even stronger magnet to pull price lower. So does that mean I'm super bearish? No, not at all. It's just a nuance that I'm keeping in mind. If the market fills the gap and then fails, right, it gets up to the low from yesterday, which was at 39.42, right? If it gets up to this low and it fails, there is much, much higher odds that it's going to go all the way down to here. That's why this is important. Re-entering the balance area is a potent thing that often causes markets to trade to the opposite end of balance. Okay, so gap rules are in play. I'm talking so slow you may have already missed it, but gap rules basically say that when the market opens with a gap, does it try to fill the gap? Since it's a gap down, if it doesn't try to fill the gap,